Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 22nd of January. All right, now it's a bit more like same as yesterday, same as last week. Still, the US government shutdown is, to me, really stalling the overall moves in the market. Sterling's the one currency pair that is moving around, and that's because we've got ongoing updates about Brexit. You know, it's shooting up to 129, back down to 128. It's a bit all over the shop. Overall, it's sort of just trading sort of sideways to me around 128.5. Still, there's potential for a move to 135. It could be 125. I mean, I got no idea. You know, and no one will until we get a finalised deal on Brexit, or whether they try and roll it back out the other way. Now, dollar yen still just cruising to the top side. I know the price action of late has just been sideways, but it's pretty much the same across all the same pairs, and it's the same thing that's happening. You know, the same setups are sitting there, but nothing's really happening. One thing I've noticed is a bit of a disconnection here between oil and dollar CAD. You know, the weaker or slightly better CPI numbers from Friday. I'm just sort of trying to catch up with what's going on here. I mean, the price action is really crap, and it actually suggests we might see this thing just slowly start to squeeze to the top side as the market does sit short because oil continues to slowly grind to the top side. But that's where it comes to, you know, and this is a bit of a painstaking process where let's flick over to the news here and have a look what's going on here. I mean, these guys are struggling for the news. Dollar steady, global growth concerns support safe havens. It's like, man, they're trying to dig up anything to get you to read whatever's going on. Aussie and Kiwi dollars burdened by global growth unease. Well, they haven't really moved anywhere. And volatile sterling rises above 129. That was for a nanosecond. I mean, what they're doing is just trying to keep you interested in what's going on. And there's not a hell of a lot to really get you stimulated because there's no news on the US government shutdown. There's no news, updated news on the China-US trade deal. So what we're left with is some peripheral markets that we need to keep an eye on and just keep following the data like we usually do and just sort of see what makes, what looks good, what makes sense and what doesn't. At the moment, the Asian equities across Australasia, Japan, you know, they're all in the red, but it's not like they're down 1 or 2%, right? It's only down 0.1, 0.2%. No big deal there at this stage. I mean, that's where Reuters and these other services get the whole global growth story from. They're like, oh, equities are off. Global growth, it's in crisis. Right, it's a whole heap of crap. Now, dollar index, as you can see on this page, I've got the dollar index in the offshore yuan, which is dollar yuan. Pretty steady. Those Chinese numbers yesterday, and I'll show you those in a second, were pretty basically flat. So we've got the dollar yuan just cruising through that resistance line and now just trading sideways. Like all these major pairs, all these, even the dollar index, lacking momentum. It's because of a lack of, you know, fresh data. And what we usually get is a lot of stuff out of, obviously, globally, but especially out of the US. So just having a quick look at those Chinese numbers, right? We've got, you know, there was a whole bunch of them coming out. GDP, retail sales, everything was pretty much as expected. The industrial output was slightly better and the urban investment just slightly weaker, probably offsets each other. So, you know, overall, things are pretty steady in China, and that's why the Aussie and Kiwi and dollar yuan didn't move. Now, you come back down once again through the soiree here of US numbers. These are all the numbers that are backlogged. You look at the dates here, 15th, any time between the 15th and the 26th is when they're scheduled, or even up to the 1st of Feb. So they don't really know when these things are coming out. But, and that's why a lot of traders are sitting put, because at the moment we don't have the usual market detail to let us know what's going on. But outside of that, I mean, this is where geopolitical events come in. Usually the claiming count unemployment change and the employment numbers here out of the UK are really high impacting numbers. But what we've got is a situation where Brexit is such an epic, massive situation that these numbers will probably be overlooked. The average weekly earnings has been a major focus of the Bank of England. They've been talking about this a lot. So to me, you've got to be watching this, because if the average weekly earnings continue to go up, there's a very high chance that inflation in the UK is going to go up, and we should see sterling move to the top side. Now, that can be flushed out by some sort of negative Brexit news, but if we don't get it, this is where, to me, already the UK fundamental picture, the economic numbers are really strong. If they continue to come in strong, even though the currency is not moving right now, the Bank of England is going to have a hell of a job trying to slow the economy down once they do get a Brexit deal or no deal or whatever happens. You know, they've got to sort something out. Now, outside of that, we have been looking for some movements here on euro. The ZEW economic data, right, economic sentiment numbers in Germany, historically are a really important number, especially for the German market or German economy, and that sort of flows through the rest of the Eurozone. So keep an eye on that as we go through that session. That's where we could potentially see some sort of movement, and euro has got a very good structure at the moment. Manufacturing sales, yeah, pretty chunky number out of Canada. I'd say if we get some weak numbers here, we might see a nice number to trigger that squeeze to the top side through 133, 133.20 on the top side in dollar CAD. And then that's pretty much all she wrote. Then we get into the following day. We've got early dawn. We'll have the Kiwi CPI numbers. So at this stage, you know, there's not a hell of a lot to do at this point. To me, keep a very close eye on the UK data. I know that Brexit is dominating things, but we may get some movement. To me, the top side looks very interesting for me on sterling. I think that's where the best potential is. So strong numbers, maybe there's a chance to get involved. It may only be short term, but definitely keep an eye on euro as we go forward, and then dollar CAD. They're your main pairs to be focusing on at this point. All right, and that's pretty much where we are, guys. When you come back in and look at the MyFX Trading Hub, there's not a hell of a lot. There's no major changes here to the overall framework of the market. US government shutdown has really put the market to sleep. As I said, the UK employment numbers, the German ZEW numbers, and the CAD manufacturing sales, the key numbers for the traders to be aware of if you're on the practical assessment. The major currency outlook, well, no change really from yesterday. And it's a little bit like watching paint dry. Just remain patient, wait for these opportunities to build, and all of a sudden the screens will light up. All right, guys, that's it from me. Not a hell of a lot of change, but hang in there. I'm sure we'll get some news shortly. All right, guys, have a good one. I'll see you in the 247 trade zone. Cheerio.